I'm back with Hank Smith this morning of Haverford Trust, Chief Investment Officer there. And Hank, when you see a stock like Alibaba, when you see a situation like Uber valued at $40 billion, what does that tell you in terms of valuations? I know you don't think this market is expensive, right, largely.
Well, there have been pockets of frothiness, social media, biotech, but biotech had a huge like mini bear market from the spring. Now you've seen recovery there. But overall, the market looks attractively priced. It's not cheap, but it's not overvalued. And again, relative to interest rates, relative to inflation, you can make the case that the equity markets look attractive.
So do you want to focus your investments in 2015 on those companies or sectors that are very much closely tied with an economy in the U.S. that is showing improvement?
Well, here's the dichotomy. You have on the one side the defensive side of the market, consumer staples and healthcare, which look pretty pricey. And the offensive side, the cyclical side, that looks much cheaper, whether it is basic industry, whether it's industrials, some of the financials, some of the banks look very cheap, and some tech, not social media, but traditional old tech, still looks very attractive.
So what do you do about the international story then? I mean, from your standpoint, you've got money in the U.S. Do you want to venture into places like Europe because the values have been crushed?
Well, yes, you still want some presence, but we're clearly overweighted in U.S.
Yeah, of course.
And that doesn't look to change
anytime soon.
Anytime soon. Yeah. The fundamentals look good. You have accelerating growth, decent valuation, but emerging markets, they've come down in valuation. They're starting to look very attractive. You just might be a little bit early there.
What are the implications of the falling price of oil? You know, earlier this week, or last week rather, we were looking at some of the Texas-based banks, the regional banks that have taken a big hit because their lending is partly based on the price of energy. What are the other implications that we need to be aware of, other than obviously it's putting more money in consumers' pockets and making good things for the economy?
So it's obviously not good for the oil patch in general, but it's also not good for the bad guys, the Putins, the Venezuela, Iran. And this really plays to our foreign policy.
Yeah.
Absolutely. I mean, it's really a gift that's being given right now.
It does, because it really changes our relationships with, for example, the Saudis, who we've been so reliant on in terms of energy.
Right. So I think we go into 2015 geopolitically from the U.S. perspective in very good shape. And it's just not the U.S. consumer, it's the global consumer that benefits from lower energy costs.
Would you be making a bet that this continues in 2015? I mean, yeah, one of the big stories of 2014 was the sell-off in the price of oil, no doubt about it.
Right.
That's one of the headlines of the year. Is it going to be a headline of 2015, or does this bounce back?
Well, I think at some point it settles in here, but this is not a demand story.
It's not. You think it's a supply story.
So this is much more akin to 1986 when oil fell below $10 a barrel, and it was a much greater correction than today. And that was Alaska and the North Sea finds, as opposed to 98, which was demand with the Asian crisis, and then again in 08, 09, which was the global Great Recession.
All right. So you're basically saying we're going to settle in at some number. But, I mean, I guess my question is, do we go back to $90 a barrel anytime soon, given the supply story in America and this shale revolution?
Not anytime soon.
But it doesn't feel like that.
But the beauty of commodities is low prices take care of low prices, just as high prices take care of high prices.
And don't forget, because of the move in oil, you've got copper down, 15-20% or something this year. You've got iron ore down 50%. So a number of other commodities are also trading down. Corn, exactly.
Right. So that'll come through to food eventually, helping the consumer.
All right. We will leave it there. Hank, it's been great having you on the show today.
Good to be with you.
Thank you so much, Hank Smith.